Karen. I'm the head of sales and marketing, coming to you from my spare bedroom in Donegal. So I suppose there's been a lot of information going out about COVID-19 and payroll and employee rights and everything over the last few weeks. So we've been really working hard on trying to communicate all of those updates to our customers. And part of that, I suppose, is hosting these webinars here today and getting our website up to date, and then also working on the payroll side of things to get the upgrades out and up and running. So I suppose there's a lot to cover today, so we'll try and get through as much information and cover as much as we can today.
Excellent. Okay, so you're going to kick off there, Karen?
Yeah, I'm joined by my colleague Rachel, who works on the marketing team as well, and Rachel has been fundamental, I suppose, in really pulling together a lot of this information and working with our customer support team and our development team and our HR manager as well. So thanks to Rachel. So between myself and Rachel, we'll present today's webinar and our content. So Rachel is going to kick things off, and then it'll be over to me.
Yeah, hi everyone. So the ongoing outbreak of coronavirus continues to spread across Europe and the wider global community. Ireland's first case of coronavirus was confirmed on the 29th of February 2020, and as of now, in just over 1 month, the number of confirmed cases of coronavirus has increased to 3,849 cases and sadly 89 deaths. A few weeks ago, Leo Radker said that if the coronavirus outbreak worsens, between 50 and 60% of the Irish population could be affected. Fortunately, due to strict guidelines for people to stay at home, the increase in the number of new cases every day is starting to drop, and we saw nowhere near the 15,000 cases that were originally predicted by the HSE for the end of March. The main rule is to stay at home, and for businesses, everyone who can work from home must work from home. It includes essential workers and workers in essential government, utilities, and other functions. You can only travel to work if you are providing an essential service. With the number of cases continuing to surge, the pandemic continues to pose a threat to our economy. The Taoiseach, Leo Varadkar, and Minister for Health, Simon Harris, have issued strict guidelines in a bid to reduce its impact on the public, on businesses, and on the economy as a whole. For today's webinar, we are focusing on the impact that COVID-19 has on Irish businesses, the new measures that have been introduced to help employers, and some key tips for employers to implement to protect employees and keep their business running. So I'll pass back to you, Karen.
So first up, we have employer and employee rights. So people's health and well-being really should be at the heart of every employer's response to COVID-19. So we're going to look at a few key points that employers need to be aware of. So first is keeping up to date with government and public health advice. So the government updates are changing daily, and employers really should keep up to date with the situation as it develops, and also refer on employees who are concerned about infections using official and expert medical sources such as citizens' information and government websites. It is an employer's responsibility to check the information that is being updated daily. Next is to engage all employees to use basic but effective ways to help prevent the spread of COVID-19. So look, at this stage, there has been a lot of media coverage on this subject, and it really is common sense at this stage. But it will be particularly important to maintain those prevention standards when we look at the essential services category. So next is, I suppose, be aware of what happens if employees do have COVID-19 symptoms. If an employee or someone an employee lives with develops COVID-19 symptoms, the entire household needs to isolate for 14 days to monitor for signs of COVID-19. COVID-19 Income Support Scheme. The government has announced a national COVID income support scheme, which provides financial support to Irish workers and companies that have been affected by the crisis. So this scheme covers a wide range of measures to help ordinary citizens and their families and business during this period of great economic and social stress. So some of these measures include a temporary wage subsidy to help affected companies keep paying their employees. Workers who have lost their job due to the crisis can receive an enhanced emergency COVID-19 pandemic unemployment payment. The COVID-19 illness payment has also been increased. And lastly, the self-employed will also be eligible for the COVID-19 pandemic unemployment payment. So these measures are going to be covered throughout today's webinar, and it's important for employers to fully understand how these schemes work. So next up is the short-term cash flow support. So we're not going to go into detail on this on today's webinar, but if your business needs short-term cash flow support, you may be eligible for a business continuity voucher worth up to $2,500. And this is available through the local enterprise offices. And we will include a link to this on the presentation that you can access after the webinar. So next we have employee rights and employees with COVID-19 symptoms. Employees showing symptoms of COVID-19 should not go to work. Employees may be entitled to sick pay depending on their contract of employment. Employers do not have to pay employees because they are sick with coronavirus unless it is part of their contract of employment. Employees who do need to self-isolate can get income support. And employees do not need to wait the 6 days before they can apply for illness benefit. The personal rate of illness benefit is €350 per week if you are medically required to self-isolate or for the duration of the medically certified absence from work with a COVID-19 diagnosis. The new enhanced benefit will be paid for a maximum of 2 weeks where a person is self-isolating and for a maximum of 10 weeks if a person has been diagnosed with COVID-19. Working from home. So employees should work from home where it is possible to do so during the COVID-19 pandemic, with the exception of essential services. For employees who work in essential health, social care, or other services and cannot work from home, they can work and travel to work. Employment rights during COVID-19. So employees do have a number of rights, and we will cover these key points throughout the webinar, such as remote working, putting staff on layoff, COVID-19 pandemic unemployment payment, and the temporary COVID-19 wage subsidy scheme. We'll also include a link to the employment rights during COVID-19 restrictions, and we would recommend that you take a look at this to really familiarize yourself with the information. Lastly, we have annual leave. So on today's webinar, we will go into some detail about annual leave entitlements, which is also a common question relating to COVID-19. So putting staff on layoff. As a result of the recent business closures, many employees have been laid off. So layoff it's a temporary measure whereby the individual is still an employee of the company, but they are not receiving any remuneration for the duration of the layoff. Normally, once the situation that has led to the layoff is over, the employee will return to their previous role on the same terms and conditions. In the current COVID-19 situation, it is hoped that many businesses will be able to re-engage their staff once the current emergency situation eases. Continuity of service is not normally affected by layoffs. So, for example, if an employee has been working for an employer for 10 years and is laid off temporarily, their 10-year service will remain intact. Redundancy, on the other hand, occurs when the employee loses their job permanently due to a business closure or a reduction in work levels. Where a layoff situation lasts for an extended period of time, an employee may claim statutory redundancy. Typically, where a layoff situation continues for 4 weeks or more, or for 6 weeks in the last 13 weeks, an employee may claim statutory redundancy. However, the law on claiming redundancy following a period of layoff or short time working has been changed during the COVID-19 emergency period. The emergency period is currently set as the 13th of March 2020 to the 31st of March 2020, or 31st of May 2020. However, this may be extended. Under the emergency measures in the Public Interest COVID-19 bill, employees who have been laid off during the emergency period as a result of the COVID-19 pandemic are not able to claim redundancy. So a layoff situation arises if an employer is unable to provide work to an employee for which they are employed to do. A short time situation arises if an employee's weekly pay or hours is less than 50% of their normal weekly pay or hours. When putting employees on layoff, employers should give employees notice in writing that they are being put on layoff, although no time period is specified. Generally, in order to lay off an employee, there should be a layoff clause in the contract of employment, and it should be a custom and practiced in the company. It is imagined that flexibility will be shown at this exceptional time if neither of these exist. Some employers may consider including a layoff clause in the agreed terms of employment on a temporary basis, or getting some form of confirmation, signature, or email from the employee to the layoff. Now, we have put together a template layoff letter that employers can use to notify staff that they are being placed on layoff. This is for guidance only, and again, we will include this sample letter in the email that we'll send to attendees later on today. So employees on layoff will continue to accrue public holidays that occur during the first 13 weeks, but they will not accrue annual leave during the period of layoff. The annual leave that employees accrue up until the point of being laid off will remain intact, and employers should not pay employees in lieu of this annual leave. Instead, it should be made available to the employee to take once they return to work. Now, again, given the exceptional circumstances that we are currently living in, it could well be the case that an employee genuinely cannot take their accrued annual leave this year. If this situation arises, employers really should try to be flexible in terms of allowing an employee to carry over their leave into the next calendar year. So short time work. If you haven't lost your job, but your working hours are reduced to 3 days or less per week, you should apply for the short time work support, which is a form of job seekers benefit. This is an income support payment for you if you have been temporarily placed on a shorter working week. The payment is made in respect of your regular salary for the days that you are no longer working. So for example, if your working week has been reduced from a 5-day work pattern to a 3-day work pattern, you can receive support for the other 2 days. Alternatively, the employer can claim back part of the employee's wages through the wage subsidy scheme. Short-time working refers to a very specific situation where your weekly pay is less than half your normal weekly pay, or the hours you work are reduced to less than half of your normal weekly working hours. Your employer has a reasonable belief that the situation will be temporary and notifies you of the reduction in hours and/or pay. Employees working short time will continue to accrue annual leave for the hours they work. So I'm going to pass you back to Rachel.
Thanks, Karen. So if your employer cannot continue to pay you and has to lay you off during the pandemic, you can claim income support from the DEASP. So the COVID-19 pandemic unemployment payment is available to employees and the self-employed who have lost their job on or after the 13th of March due to the COVID-19 pandemic. The pandemic unemployment payment is paid at a flat rate of €350 per week for the duration of the pandemic emergency. It was originally set at a rate of €203, but it was increased to €350 by the government on the 24th of March. You can apply for the payment if you're aged between 18 and 66 and have lost your employment due to the coronavirus restrictions. Students, non-EEA nationals, and part-time workers can apply for the payment. You can also apply for the payment if you're working casually and you've become fully unemployed as a result of the pandemic. If you have voluntarily taken time off work to look after your child because of school or childcare closures, and you're no longer being paid by your employer, again, you can apply for the pandemic unemployment payment. You cannot claim if you are continuing to get income from your employment or if you are voluntarily left your employment, except for in the case of to look after your children. If an employee has been diagnosed with COVID-19 or has been told to self-isolate by their GP, they should instead apply for illness benefit, which, as Karen mentioned earlier, has also been increased to €350 a week in line with the pandemic unemployment payment. The government has also announced new measures to provide financial support to employers affected by COVID-19. As part of the measures, Revenue is operating a temporary COVID-19 wage subsidy scheme, and this scheme applies to employers who may wish to top up employee payments and for those who are not in a position to do so. To qualify, employers must be experiencing significant negative economic disruption due to COVID-19. They must be able to demonstrate to the satisfaction of Revenue a minimum of a 25% decline in turnover. They must be unable to pay normal wages and normal outgoings fully, and they must retain their employees on the payroll. The temporary COVID-19 wage subsidy scheme is taking effect from Thursday, the 26th of March 2020, and it is expected to last for 12 weeks. The scheme is restricted to employees who are on the employer's payroll as at the 29th of February 2020, and for whom a payroll submission has already been made to Revenue in the period from the 1st of February to the 15th of March 2020. This scheme replaces the previous employer COVID-19 refund scheme, and if you've already registered for the refund scheme, you do not need to re-register for this new scheme. Employers that are not registered but wish to register for the scheme can do so through My Inquiries. Under the scheme, employers can pay 70% of the employee's average weekly net pay as a non-taxable payment, and in return receive a refund from Revenue for this. And just to clarify, the net pay is the gross less the income tax, USC, and employee PRSI. The refund from Revenue will, in general, be made to the employer within 2 working days after the receipt of the payroll submission. This payment is capped at €410 per week, where the average net weekly pay is less than or equal to €586, or €350, where the average net weekly pay is greater than €586 and less than or equal to €960. Employees with an average net weekly pay greater than €960 will be excluded from the subsidy scheme. These payments are liable to income tax. However, the subsidy is not taxable in real time through the PAYE system during the period of the subsidy scheme. Instead, the employee will be liable for tax on the subsidy amount paid to them by their employer by way of review at the end of the year by Revenue. The period for calculating an employee's average weekly pay is January and February 2020. But if you are a BrightPay customer, this calculation is automated in BrightPay, and I'll show you how this works shortly in BrightPay. For Thesaurus customers, an average pay calculator is provided in Thesaurus Payroll Manager. Employers may top up this payment if they are in a position to do so. This top-up amount, when added to the employee's subsidy payment, cannot be greater than the employee's average net weekly pay. The maximum additional payment top-up is the same for all employees, so the treatment is exactly the same for employees on short time or reduced hours or pay. If the payment is topped up by more than the permitted amount, the subsidy will be tapered. So for every €1 extra paid to the employer will lose €1 on the subsidy. And just to note also that any top-up payment made is taxable and USCable, and the combined payment is to be processed under PRSI class J9. So I just want to show you how to process the wage subsidy payment in BrightPay payroll software. And the functionality is also provided in Thesaurus Payroll Manager and works in a very similar manner. But today I'm just going to focus on BrightPay. So to apply the wage subsidy payment to an employee's payslip, the first step is to select the employee. Within the Additions and Deductions section, click Add, and then from the drop-down, choose COVID-19 Wage Subsidy Scheme Payment. BrightPay will now calculate what the refundable payment amount is and display this on screen. This figure is based on the employee's average periodic net pay during January and February and takes into account the capped payment thresholds. Where it is calculated that an employee's average net pay for January and February exceeds the €960 per week, the calculation screen will indicate that the employee does not qualify for the subsidy. If you are in a position to provide a top-up to this payment, this screen will also indicate the maximum top-up amount you can give without affecting your subsidy. If you wish to apply the wage subsidy payment as well as the maximum top-up amount, simply click on Apply. If you want to pay some of the top-up amount, amend this top-up amount figure and again click Apply. If you do not wish to apply the top-up amount, you need to change this figure to 1 cent and we'll apply. But in today, I'm just going to go back and give the maximum top-up amount. The wage subsidy payment, as well as any top-up amount entered, will now be pre-populated in the employee's payslip, and all other payment benefits and deductions will be zeroized. The employee's PRSI class will also automatically set to J9. Once you have finalized the payslips, the information will flow through to the PSR, and Revenue can use the submission to calculate the refund due to the employer. And as I mentioned, the refund should be made to the employer's bank account within 2 working days after Revenue have received the payroll submission. The temporary wage subsidy scheme has been divided into 2 different phases. The first phase is the transitional phase, which will run from the 26th of March to the 20th of April. And then the operational phase will be in place from the 21st of April onwards. During the transitional phase, employers must work out the payment that can be made to their employees. That is the 70% tax-free payment and the maximum top-up allowed. Revenue will automatically refund €410 per week per employee on the scheme, as they won't know what employees are entitled to. At a later date, Revenue will perform a reconciliation and will look for the repayment of any overpayments. During the operational phase then, Revenue will inform employers how much they can pay tax-free and the maximum top-up allowed. They will use this payroll data submitted for January and February to work this figure out, and during this time, Revenue will refund the 70% due, as they will have instructed the employer how much can be paid. In many cases, the payment of the temporary wage subsidy and any additional income paid by the employer will result in a tax and USC refund to the employee. Any tax and USC refunds that can arise can be repaid by the employer, and Revenue will also refund this amount to the employer. In this case, the reports in the payroll software will not match the Revenue statement. Here, the Revenue statement will be correct, as Revenue will account for the refunds. Just to add also, employers must not operate this scheme for any employee who is making a duplicate support or claiming duplicate support from the DEASP. So for example, the pandemic unemployment payment. Where an employee has been previously laid off and they've been rehired, the employee will qualify for the wage subsidy scheme if their DEASP claim has been ceased. However, employees must have been included in the submission between the 1st of February and the 15th of March under the same PPS number to be able to qualify for this. And I'm now going to pass you back to Karen again.
Okay, so next we're going to have a look at how BrightPay and Thesaurus can facilitate remote working. So although both BrightPay and Thesaurus are desktop solutions, they are still very flexible and can facilitate working from home. So both Thesaurus and BrightPay can be installed on 10 different PCs. So essentially you can process the payroll from 10 different locations. The payroll files can be accessed remotely through cloud environments like a shared server, Google Drive or Dropbox. This flexibility allows users to continue to operate their payroll as normal. We have put together a step-by-step guide on how to use BrightPay remotely and Thesaurus remotely. And again, we'll include some information later on today in the email, but I'm going to talk you through some very important things to note and what you'll need. So the first thing you'll need obviously is a computer, and you'll also need an internet connection for transmitting those files through to Revenue. If you're using your work computer, you're already set up and you're ready to go as normal. If you are using a different computer at home, BrightPay and Thesaurus will need to be installed on that computer. Now, this is a very quick download that you can access through our website. And then simply you need to enter your activation key that was included on your invoice. If you can't find this license key, go into your inbox, search for invoicing Thesaurus or invoicing BrightPay, and you'll find a copy of your invoice there. And as I mentioned, the license key that's on the invoice can be activated on 10 different PCs. So next we'll come to accessing the payroll file, and there are a few different options here that we can do. So if you're using your computer, your work computer, you'll already have your payroll file. Similarly, if you use a remote desktop, then you just need to log into your remote desktop as normal. In a shared drive environment, you can set your payroll file save location to a shared drive, such as Dropbox or Google Drive, or maybe an external server. Once you log into the shared drive, then the payroll files should be available within your home environment. Alternatively, before leaving the office, simply copy the payroll file or files to a USB key, or you can also email it to yourself and then follow our help guides on transferring from one PC to another. For payroll bureaus and accountants, an external drive would be the preference here rather than emailing a large number of payroll files. You can also access the information by using BrightPay Connect or Thesaurus Connect. So if you are an employer using BrightPay Connect or Thesaurus Connect, you can simply restore your payroll data into your payroll software by signing into your Connect account. If you're an accountant or a payroll bureau using Connect, you can assign relevant payroll staff members as various users and give them access to certain companies that they need to work on specifically. And in a similar manner, make sure to restore the required payroll data from their Connect account. Once completed, they can synchronize the completed payroll backup to Connect again. In this situation with multiple users, care must be taken so that other users are not working on the same data file at the same time. So Rachel is going to show us now how you can use BrightPay to work remotely.
So thanks, Karen. So I just want to show you the steps that Karen has just talked through. So here I've just downloaded and installed the software from the BrightPay website, and I've entered my license key. And if you are not using Connect, you will need to click on this Browse button at the bottom of the open screen window. And then you'll need to navigate to where the payroll file is saved. So depending on whether you stored it on Dropbox or Google Drive, or maybe an external server or hard drive, such as a USB key, or if you emailed it to yourself, you might have downloaded it into your downloads folder. So I have my company here and I'm going to open it. And now that it has opened the payroll file ready for payroll processing on the new PC. If I just close out of this company, and you'll see here the employer file has appeared on the open screen for quick access in the future. Method 2 then is for if you're using BrightPay Connect, and to access the payroll from a different PC, we just need to click into the Connect tab. Next, we need to enter our email address and password of your BrightPay Connect account and sign in. The employers that have been connected to your BrightPay Connect account will be displayed on screen, as well as the date and timestamp that they have last synchronized. Click on the spanner symbol to the right of the employer file and select Restore from Cloud Backup. Select the backup which you wish to restore. So in this instance, we're going with the most recent backup, and download and restore. And as soon as the download is complete, click Restore and Open to replace your current data file with the backup. And again, our payroll file has now been opened. Just to note also, as Karen referred to, if you are in a payroll bureau situation, care must be taken to ensure that the synchronization is up to date. And although the payroll data is automatically backed up, it's worth just doing a quick manual backup here, just to make sure in case you'd lost internet connection, for example. Similarly, before restoring from a cloud backup, just keep an eye on the date and timestamp to make sure that you're restoring the most recent backup. So how Connect's online client portals can help? So Connect is an optional cloud add-on to our payroll software, and it's available with both BrightPay payroll software and the Source Payroll Manager. It's proving to be hugely beneficial for payroll bureaus, employers, and employees as we continue to work remotely. With Connect's automatic cloud backup, payroll information is stored online and can be accessed by employers anywhere, anytime. However, the benefits of Connect can go much deeper than simply enabling you to securely work from home. Employers can use Connect to remotely manage their employees' leave, update employee documents, and send communications to employees that are working remotely. Essentially, it enables full business continuity with secure GDPR-compliant communications. Connect's document upload feature allows you to upload documents and distribute them to employees, which is much more important now with a lot of employees working from home. Maybe you want to introduce a written working from home policy, or you might simply want to circulate documents to help employees with the new working from home situation. Working from home is an adjustment for a lot of employees who are used to the hustle and bustle of the office environment, and you need to try and keep employees as productive and positive as possible. Payroll bureaus and employers can distribute mission-critical documents such as updated health and safety documents, employee rosters, government grant information, employee sick leave entitlements, updated contracts, amongst many other documents that will greatly support your clients and their employees during these challenging times. As well as adding documents, Connect allows employers and managers to notify employees of important announcements. Employees can view the message on their employee self-service app on their smartphone or tablet, and the employer can track whether or not an employee has viewed the message. It's a great way to keep in touch with employees who are working remotely. And again, I just want to show you how this documents and resources feature works in Connect. And this is available on both BrightPay Connect and the Source Connect. So we'll see here we have a number of files added. We have company handbook, contracts of employment. I also have added a new section here for COVID-19 because I have a few different resources to do with the virus. To add a new document, we can simply click on Add. And then we can add the name. We can add the message to send to the employees about this. And we can upload a file. So I created a file earlier today that's tips for working from home. So I'll simply upload that file. Similarly, you can add links to external websites. So you might want to add a link to your own website, or it might be a government website with advice, totally up to yourself. We can also add a category here so that the document appears in the correct place on the Documents tab. So I'm going to choose COVID-19. I'm going to scroll down a bit now for a few more settings, and we can make this available to the employee, and we can show it in as a notification in their employer dashboard. And then we can add access rules to choose which employee we want to give it to. So we can give a document to all employees, we can give a document to a particular department, or we can also distribute documents to individual employees. In this case, all my employees are working from home, So I'm just going to say all employees, and I'll add that. And once I submit, it will save the document. Back on the Documents and Resources tab again, you'll see that the new Working from Home document has been added under the COVID-19 category. And as an employer or manager, you can click in here at any time. You can send notifications to employees, so a notification will appear on their smartphone or tablet. You can access activity log as well to see at a glance who has read the document and the date and timestamp of when it has been done. Just one last thing I want to show you on the Connect as well is with the employees and what it looks like for the employee getting this notification. So the employee, once the employer has sent the notification, the employee will get the notification on their screen. If we click on the notification, we get to the online home screen. At the bottom of the screen here, you can see in the notifications, the working from home document is appearing, and we can click into this, and this is where the employee can download the document, or if we included any external links, the employee can access them here also. So I'm now going to pass you back to Karen again.
Thanks, Rachel. So we're just coming up to the end of our presentation, and I suppose it might be worth considering looking at the long-term changes as a result of COVID-19. The reality is working from home is already very popular, and flexible working is a trend that has emerged in the last decade as more people seek that ideal work-life balance instead of work-life burnout. In the UK, nearly a quarter of the workforce now has flexible working arrangements. That is, they work part of the week in the office and part of the week at home. So flexible working brings many work-life balance benefits as employees have more time to see their family, exercise, and dedicate time to themselves. And interestingly, 7 in 10 of those who have flexible working arrangements say they are less stressed and really value the benefits. As well as the health benefits, it often results in happier employees. Now, that stat is obviously from before the coronavirus outbreak and the need for self-isolation. But looking at the long term, when everything hopefully gets back to normal, happy employees tend to work harder and be more productive. For employers, flexible working also helps to attract and retain talented employees. Additionally, it can result in increased loyalty and reduced office space costs. So before now, many employers didn't really consider employees working from home to be an option. They didn't really think it would work. But by being advised by the government to work from home, many employers and employees were forced into the unknown. And in a lot of cases, I really think it's been an eye-opener and a turning point for many businesses to recognize just how beneficial flexible working can be. In a recent survey of over 1,000 CEOs, CFOs, and HR directors, nearly 2/3 of them said that they had seen a positive side to working from home. That said, if we are working away from the office for months on end, millions of euros will be wasted in unused office space, and employers might look more favorably at remote working. I suppose just to finish off on a high note, 84% of those surveyed of companies, that are working remotely have seen team spirit improvement with this increased collaboration. So I think it really shows that employees are really pulling together and helping each other out in this time of crisis. So just before we finish up, there was a lot of information covered today. So we have added a number of additional links and resources that we will make available to everybody after today's webinar. We do also have a COVID-19 resources hub on our website, which, as the latest information is being updated by the government, we're working as quickly as we can to change that information and making sure that it's the current information is always there at all times. So we have covered a lot on today's webinar, so we will send everybody a recording of the webinar in a follow-up email. So I'm going to pass you back to Des now. Are you there, Des?
Thank you very much, Karen, and thank you very much, Rachel, for your presentation. Folks, we're up to somewhere in the region of 160 questions between the chat and the questions. So just pay attention down in the Q&A box. Questions are being answered by the BrightPay team, as we go through this session. So please do keep asking questions. Just in terms of Karen, there was a question there in relation to redundancy, and we don't know what the redundancy legislation is saying at the moment. You know, because but they have within the Act, within the COVID Act, they have opened up the door to change the redundancy legislation in the future. Do you have any insights into that, or what is your advice to people in relation to that?
But today I'm joined by Laura Murphy, who is our HR manager and our employment law specialist. So a lot of these questions, I think I'm going to pass them over to Laura. And then we also have Audrey, who is our customer support manager, you know, and more on the kind of technical questions. And we're joined by Paul Byrne. So Laura, are you there? Could you take that?
Yeah. So I suppose on redundancy, what we've seen is, you know, we've had that exception. So I suppose employment law has stayed the same. It hasn't had too many changes in all of this, but we have the one that we have seen is definitely the one on redundancy. And that extension in the emergency period from the 13th of March to the 31st of May, where these employees are not permitted to make a redundancy claim. I don't know if that's going to be a long-term thing. I would imagine that period is definitely going to be extended the way things are going. Beyond that, at the minute, I can't say for certain how it's going to impact long-term.
And tell us this, Laura, from your perspective, we're seeing large numbers of companies that are, say, getting team members to take, if they're on any kind of reduced working hours, that they're taking a day's holidays a week, because we are facing into this issue, particularly with the accountancy profession, where so work is continuing to move for people that are remote working. But now, if this comes to an end in hopefully sooner rather than later, but this comes to an end at a point in time, and then people have holidays to take, and then we have tax deadline at the end of the year, and everything begins to get very compressed. It sounds like a very logical thing to do, but from a HR perspective, can you actually make the taking of a day's holidays a week compulsory as part of this solution, or what does employment law say on that?
Yeah, well, under the Working Time Act, you can. Employers have full ability to request when employees take their annual leave. I suppose the one thing to say is that generally they have to give double the period of notice, in terms of if you wanted somebody to take a day's annual leave, then you're going to give them 2 days notice so that they can take it. What we've actually seen in the UK is an interesting point, and I don't know whether we'll see it here, but I think it's a piece of flexibility that employers might consider. In the UK now, that they're saying to people, like what you say, let's say we all go back to work in September and we don't have time to take our annual leave if it wasn't taken, and they're allowing employees carry that over for 2 years. So I think if employers are not saying for employees who are working now to take a day a week, and they don't put that bravado in, but they say then at the end you've got a lump of holidays that you haven't taken. I think there has to be some flexibility there from employers and employees to say, right, well, we're just going to carry that over for a little bit of extra time as well.
Okay, and just in terms of, there was a distinction and a nuance that Karen referred to in relation to when short time triggers redundancy. So if people are looking here at putting people onto short time hours, like what are the implications of that? So I know it has been suspended, but like can somebody still come back and say, well, you know, I was put in short term, this is effectively redundancy. Now, who would leave a job right now is beyond me, but it is a question that I was asked during the week.
Yeah, at the moment, if you've been placed on short-term or layoff during this emergency period because of COVID-19, you can't say, no, this is effectively redundancy. I want my redundancy during this emergency period, as the girl said, the 13th of March to the 31st of May at the moment. So there's no claim for that at the minute. I think we have to assume at the minute in all these layoffs that people will return to work. It's a temporary situation. whether that's rightly or wrongly, and what will happen down the line, we don't know. I would imagine we'll be dealing with a lot of redundancies. We might be here in a few months talking about redundancies and how we're going to process that. But for the moment, we have to assume that all these people will return to work, and they're on a temporary layoff period or on temporary short term, and they have no claim to request a redundancy.
In terms of one of the big things, Laura, from a HR perspective, is selection. So if there's going to be changes to working conditions, that selection is critical. Do you have any guidance or advice in relation to selection and making decisions? For some people, it's very, very easy, but for others, it's not so easy.
So do you mean in selection as to who may be laid off or who is put on short term?
Selection in terms of, well, who so this person's going short term, this person's being laid off, this person's being retained. What are the pitfalls in doing that?
Yeah, well, the big one is that you want to avoid a discrimination claim. So any of your protected characteristics, you want to make sure you're staying well away from that, and you're not, you're not placing somebody who's on maternity leave. Oh well, we'll just lay them off. So you just have to be careful. So it's about setting your objective criteria. What's essential to the business, keeping it very, core to the business. What do we need? And once you do that and have some sort of a transparent, write down your selection criteria, why you've chosen A, B, and C, and just be aware that discrimination claims, you want to avoid them.
And just another question related to that, Laura, but slightly different. If somebody, so obviously redundancy entitlements kick in after a period of 2 years. I'm not a HR expert, so correct me if I'm wrong in anything I say here. So redundancy entitlements kick in after a period of 2 years. If somebody is being put on layoff, does this layoff period aggregate in terms of their entitlement to redundancy?
Yeah, absolutely. Yeah, and that's something that I suppose employers need to be cognizant of and bear in the back of your mind. So layoff, your length of service is not impacted by layoff. So it could, and equally when we're talking about that 2 year going into redundancy entitlement, it'll also, some employers may want to bear it in mind for employees with less than 1 year's service going into an unfair dismissal, and they'll now have unfair dismissal rights. So absolutely, your service is going to continue in your period of layoff.
Okay, a question that's coming up again and again and again, and I see Marion has posted again, for the employees who are off and claiming the Department of Social Protection 350, are they marked as leaving on the payroll, or are they being kept on?
Laura, do you want me to answer that?
Yeah, sorry, George, did you mind?
Yeah, I kind of had marked one of those to be answered. It is coming up a lot. I suppose we've been told since day one from revenue that employees should always be ceased on the payroll when making any claim for any type of unemployment benefit from DASP. We were getting a huge amount of, I suppose, customers saying that their employees have managed to claim without them being ceased on payroll. So we did push revenue on this. They've spoken to DASP, who have confirmed that they're not looking at cessation dates at the moment, but that's purely down to the volume of applications that they're receiving. So I think DASP and revenue's line would still be that you should cease employees, but the reality is that DASP are paying out without employees being ceased. So some employers are choosing to just leave the employees on the payroll, with zero pay for the time being, I suppose, in the hope that this is all very short term and then they're back on the payroll as normal. So I mean, what
I'm not sure between Audrey and Laura who's best positioned to answer this question. But a significant issue, and this was flagged to by one of our Profit Pro members back literally last Friday once the legislation landed. And it was the inequity in relation to the scheme. So let's take the example of a retail outlet that is permitted to stay open. They have 20 on their team, and they put 10 of them onto, so these people wouldn't work full 37.5-hour weeks. Everybody is sort of on flexible hours. Everybody's on reduced hours. So let's say the average hours are 25 across the board. But some team members were put on the layoff scheme, and they're at home getting paid $350, And then there's other team members who continue to be in the business, actually on the front line, putting themselves at risk, coming home with virtually the same amount of money.
Yeah, I suppose we have raised this with revenue since the scheme, I suppose, was launched. You know, we had people who were earning less and they went to 203 when we had the temporary refund scheme. And then all of a sudden, then they're only entitled to 70% of their average net pay, which brings them down a lot. So, I mean, it does seem hugely unfair. And I suppose, you know, I suppose we have expressed that, but we've no control over it, unfortunately.
Okay.
I was going to say another thing we don't have control over there is I just noticed the revenue online services has gone down. So I'm probably just going to have to go offline myself at the minute just to fix a few things here.
Okay.
So I suppose Audrey and Laura, both of you are on the front line here in terms of dealing with the issues, interpreting the legislation. I know you've answered, I see a colossal 77 questions answered during the course of the session. What are the big questions, the big issues that you're encountering that is critical that accountants going off this call understand and are aware of?
Okay, I suppose I can go through the hot topics from a support point of view that we're getting in relation to
Absolutely brilliant.
Yeah, so I suppose one of the most confusing things is I suppose we had the refund scheme temporarily where employees were entitled to €203, and it just so happened that the pandemic unemployment payment from DASP was also €203. So when the announcement was made that that was increasing to €350, and at the same time this subsidy scheme was announced, there was a lot of people who thought that the 203 on payroll automatically went up to 350 for everybody, which unfortunately isn't the case. So we do have a huge amount of people saying, but I just want to pay the 350, but you know, that option isn't available to employers. You know, the only option available through payroll is the subsidy scheme, which is the 70% of up to the limits. So that's probably one that I suppose, probably every second query is people saying, but I just want to operate the, you know, the scheme where we can pay 350, but you know, that's not an option for employers. I suppose another one is whether or not employees should be ceased when they're claiming from DASP. So, I mean, just to say on that, what DASP will look at is they will look to make sure that there's nobody that they're paying out that is also being paid on a subsidy scheme. So they'd be checking, you know, the records with revenue to make sure that there's no J9s going through for somebody that they're automatically paying the pandemic unemployment payments to. I suppose another one is the calculation of the average net weekly pay. It does include notional pay, which has taken a lot of people by surprise. They've come back to say, you know, the calculation is wrong or it shouldn't include this. Revenue have confirmed that it should include notional pay, and it is also before the pension deductions. So we do have people ringing us saying they want to change the figures, but when Revenue do their calculations and they work out what people's average net weekly pay is, they're going to be using exactly the same calculation as us, which does include notional pay, so it wouldn't be right, I suppose, to exclude it.
Okay.
They're probably the most topical ones at the moment, to be honest.
Okay, so is there any final comments from you, Laura? I had a plan B here in case anything happened to our tech setup here from well, we call it the toy room, but from the dump room. So my computer has just crashed. So my plan B going onto the phone has saved the day. Is there any other key takeaways for the accountants that are online with us?
Well, I think Audrey's done a good sum up from the payroll perspective, and I think you probably asked your employment questions. I suppose for me, at the heart of this is not to forget that the reason why we're doing this is because people are sick and people are dying, and a lot of our staff, you know, I say staff, the people who are working right across the country in their personal lives, maybe they'll be impacted or affected by something of this, and we may not know. So that it's just important for employers or accountants just to have that support there, and for everybody to keep in contact, and for line managers to pick up the phone and talk to their, you know, to people who are under them once a week or whatever it is, and just for people to support each other because everybody's going through a lot.
Absolutely. In terms of speaking to Revenue, have you got any indication from Revenue? Read the top up based on net pay and not the not regrossing of it.
Yeah, I suppose this is something else. There's quite a lot of confusion on. So, I mean, the top up absolutely cannot be any more than the difference between the subsidy amount that the employee can be paid, the difference between the subsidy amount and the average weekly. But it gets entered on the payroll as a gross, and I think that's where the confusion is coming from. So, if somebody has an average net weekly pay, for example, of €500. So 70% of that is 350. So 350 is the subsidy amount, and that's the amount that goes into the payroll as the non-taxable amount. And the maximum amount that can be paid on top of that is 150, because that's the difference between the subsidy and the average net. But that goes in as a taxable payment on the software. Anything more than that will reduce or taper the subsidy that the employer will receive.
So if you top up over the maximum amount allowed, it reduces the subsidy amount?
Yes, so for every euro more that you pay, your subsidy gets reduced by €1. So it's euro for euro.
Yeah, but basically the calculation is really making the decision in relation to the employee's total take home through a combination of subsidy and top up. So if a team member is getting a top up in excess, well, it's by all means, employers are entitled to do it, but it reduces.
It reduces what the employer gets back, absolutely, yes. Sorry, one question that did come in just from Rachel was doing the presentation there was just around the taxation of this subsidy payment. So Rachel had mentioned that the subsidy payment is taxable, but it's not taxed in real time through payroll. So it's very important, I suppose, to remember that this is a taxable payment at the end of the year when revenue do their review. The employees will owe tax on all that subsidy payment that has been paid to them.
Just touching into that, I don't have the same functionality yet. It's Audrey I'm speaking to here.
Yes.
just to touch onto that. So at the end of the year, this is going to be taxable. Now, I know everything is so new here and everything is so fresh here, but have revenue given any indication? Like it's going to result in definitely at the higher levels, there being taxable subsidy having been paid. Employees are currently concerned, well, I'm getting this top up, this is great, but who's going to pay the piper, when and how?
I suppose we, would have pushed revenue and said that these employees, should have been put on a week one, month one basis, because many of them are getting tax refunds at the moment. So they're getting this amount paid on their payroll as non-taxable. They're getting a tax refund. They think everything is great. And most people that are receiving it don't realize that this is taxable. So all they have said is that it's taxable, as part of their end of year review. And I'd imagine it'll be taxable by adjusting credits and cutoff points over a year or a couple of years. And that's how it will be paid.
Yeah, I can just add to that, Audrey, that we pushed one of the top revenue guys on it. He said that basically he preferred that if we didn't change them to week one basis, because the idea is for the employee to get the money, as much money as they can, because they need that to live on. And that, as you say, it's something they'll deal with at the end of the year by probably reducing the RPNs for the following 2 or 3 years.
Yeah, and those refunds of tax and USC that are coming up at the moment on the subsidy scheme are also repaid to the employer. So the employer, when they get their subsidy payment to them, they're also getting any refunds of tax that they've paid to employees. So they're getting both, 2 different types of refunds or payments.
So based on the comments and the stuff that's coming in, there appears to be some contradictions between what revenue are saying to yourselves versus their guidance. And this isn't a thesaurus or a bright pay issue. And our experience here is revenue are scrambling, and they're literally developing and evolving the guidance step by step. But there definitely appears to be some contradictions.
They have updated their guidelines for the scheme today.
So there was new, was there?
They made some changes to the guidance today where they've, I suppose, clearly stated that, the wage subsidy plus any additional pay must not exceed the average net weekly pay. So they put in some examples and everything. So they have, I suppose, fleshed it out a little bit today.
Okay, folks, I see we're just up to 3 o'clock. We said we'd be here for an hour. First of all, I just want to thank Thesaurus, Bright Pay, and the entire team for our session today and for all the information you've given to us. Yes, we are going to make the slides available. We will have a recording of the webinar. Will instantly be available in the Facebook group as soon as we finish this session. Look, we currently have 153 questions unanswered, and there's almost 100 answered. So we're up to 250, heading for 300 questions. If we can answer those questions for you, we will. But obviously, you've got to appreciate, as the Thesaurus team have just told us, new guidance coming in today. We're answering the questions. We're trying to get the information, get it in, answer them, and get it back out. Mihal and the team have told me that we're going to have our COVID website is possibly going to go live over the weekend. It will be hosted in Knowledge Hub. We've built a whole COVID resource within Knowledge Hub. So there will be a free access area. Obviously, if any of you, if anybody has urgent questions, Knowledge Hub is there. We're answering as much as I can within the groups. But Knowledge Hub members obviously have priority. So we're focusing on answering the questions to our Knowledge Hub members. Yeah, I see somebody else has just asked me, will we put up the questions and answers? We're going to extract the questions and answers. Any of the ones that have been answered, we will put up and make available in some form. So folks, just want to thank you all for joining us here today. And I just want to leave you with one thought. I know this is a difficult time, but we're already seeing it. It's already happening in terms of accountants, the stress and the pressure, okay? And I know it's hard, but like I appeal to accountants because, like, the stress is coming through in your clients, and that's dragging you down. It's been one of the busiest fortnights in the history of the accountancy profession. And I know the tendency is to go and help. But I just, my final thought here in terms of looking after yourselves, this is a marathon, not a sprint. And take the time at the weekend, switch off as best you can, tune out, and get some rest, get some relaxation, get some rejuvenation, and come back at it on Monday morning. And I'll be honest with you, the way I'm looking at it now is we're going back to the old rules of kind of 5.5, 6 days working. I grew up on a farm, and that's how we operated. But we had 1 day a week where nothing happened. And I just think it's important to remember that. So thank you all for attending. We're continuing to do anything we can for the profession. And if you want instant access, if you're here on the webinar, you're not already a member of the Facebook group, we will send you a link to the Facebook group when we're sending out the material this evening. So Karen, any final words from you on behalf of your team?
Yeah, look, as the guy said, look, everything is updating so quickly, and we're really trying to educate our customers as all of this information is being updated. So we are trying to get in touch with our customers through email. And we're also trying to support our customers as much as possible. I think one of our busiest days this week, our customer support team answered 1,149 calls, Audrey. So, like, I suppose bear with us if you are a Bright Pay or a Thesaurus customer. We're really, like yourselves, just trying to help our customers as much as possible. So the wait times might be, they might be a wee bit longer than normal. And yeah, I suppose I'd also kind of say, like, on a HR level, our HR manager, Laura, has sent out a lot of kind of communication for us to kind of keep well and look after ourselves and take breaks and, to try and separate the work-life balance. And it really has helped, all of us as employees to kind of, to remember to look after our mental health. So, it is something that has worked really, really well. So I suppose take some of that advice on board, look after yourselves, and try and just do what you can and take some breaks as well. Yeah.
Thank you so much, Karen. Thank you very much, everybody, for attending. Thank you very much for your kind comments, and thanks. Our team is working around the clock, so they really are pulling out all the stops. So your thank yous and your appreciation is greatly appreciated. So thank you very much. Everybody, until we see you again, let's get it done. Stay safe, and we're in this together. Thank you.
Thanks, everyone. Bye.
Thanks,